So the markets are just continuing to crash. We're having another gap down here to start out the week. Things are looking terrible out in the economy. Everybody's freaking out. But should you? Are these markets going to continue to drop? Should you be chasing and going bearish here and buying puts? We're going to be answering that question here in this video. What's going on, everyone? My name is Tony. I make a video every single Monday to walk you through the weekly plan that I have as a professional trader to help me navigate these crazy markets so that I can make money, continue the life that I want, and hopefully that you can look at these levels and make some money as well in your trading because you'll be better prepared and not fall for the traps that the markets are putting in. Real Life Trading is a stock market education company. We are not here just to simply feed you trades. We are here to teach you how to trade safely, effectively, so that you can make real changes in your life, make real money by clicking a button, and finally have the success that you're after in the markets. And so go check us out over at reallifetrading.com. Links are down below. You'll get hours of free trading courses no matter what experience you're at, beginner all the way through advanced. Feel free to come check out our trading community. It's got thousands of traders there. Come check us out and trade live with us so that we can show you how to navigate these markets as they're open. We can all make some money and you can learn how to actually trade. All right, so let's dive into these markets here. So SPY and Qs are the ones that I'll mainly go over here in this session. IBM was requested in the comments from last video, so I will spend a few minutes on IBM as well. So if you have a ticker that you'd like me to go over, throw it in the comments for this video, and the one that gets the most thumbs up, I will throw into the video for next week. So let's jump into SPY. Man, it just continues to get wrecked. But if you're looking at price action, right, everyone else is looking at the markets through emotions. You've got to look at the markets logically through price action. Where are we at? What are we doing? And what's most likely going to be the scenario coming into this week? Well, it is very possible that with this huge gap down that we continue to sink and fall off a cliff. I would say 480 to 450 is about the range that I'd be looking at for a bounce to come back in. If we do continue to sink off really, really hard, I would expect a V bottom to come in and to start bouncing, because at that point, someone's going to have to come in and start saving this market. They're going to turn the printer back on for the money. Right? They're going to be like, all right, sounds good. Everyone gets money again. They're going to come in and save it one way or another. They're going to announce, tax cuts. They'll do something. If this market just keeps getting routed and we start cutting through 480 pretty strongly, expect some sort of saving grace to come in soon. That's what I would expect. But we do have a ton of open gaps all the way down to 420. I doubt we get there. Now, it's possible. This thing could fall off a cliff and do that. Yes. What I'm thinking, in my experience as a full-time trader here now for, 6 or 7 years, I see max fear coming into this market, and I think that this is actually going to have a pretty strong bull week coming through. It doesn't have to do this. I will be watching the smaller time frames to see if the bulls are going to try to build some sort of structure that will give me an idea and a little bit of a clue that momentum could be shifting short term. But I think that with this gap down, it's going to scare the heck out of everybody. Everybody now is officially loading in bearish. There's only puts in the markets. There's no calls. And this is a perfect trap from the markets for this to bounce up very, very strong this week. So look for that, because if everybody's loading in bearish, especially on this gap down, is going to really start scaring everybody. I know Friday was pretty much like the liquidation event, and now it's gapping down. It is possible that this thing falls apart, but if I can get some sort of support building through here and we can get the bulls stepping back in, expect this bull run to be extremely hard, extremely fast. So it will come in and just bounce like crazy. As soon as everybody starts feeling like, okay, the bottom's in, everything is safe, we probably have another rotation back down. And so I see us moving back up into 550 on SPY, maybe even 555 on SPY this week if the bulls step in. It'll be very, very strong. And then as soon as everybody's up through here and getting like, okay, we're bullish, everything's fine, I'm going to start buying the dip again, it's going to gap and it's probably going to start to fall back down again. So I could easily see that playing out, because that would be the best case scenario for these market makers, right? The amount of puts in these markets are just ginormous right now. And so it doesn't mean that it has to bounce. We could go lower. And like I said, if it does go lower, look for 480 all the way down to like that 440, 450 area. And then I would expect a bounce. But price action and structure is telling me that we are getting to extreme levels. This gap down normally marks some sort of reversal, and I could easily see this thing rampaging back up. Now, will we actually make it all the way up to 550? I'm not sure. 530 is also going to be a pretty strong low level based on options. We got a couple gaps here that I would think that the markets would like to fill, at least one of them. And so make its way back up into here, and then I would be looking for more bears to come back in. I do not think the bottom of this market is in. It could be, and it all depends on how far we go, right? If it continues to drop, then there's a higher chance that the bottom will be in, because it's getting a little bit too parabolic. If we can get a bull bounce, I would expect one more dip to come back in, and that should bring in our wave 5. That should be what finally cascades this market down and brings us to our final levels. I don't think we get much lower than 420 here on the markets, but I do believe that we'll get there, especially with how strong we're closing down on weeklies. Let these market trap all the bears, so let it run down, and then it's going to rampage back up. All your bears are going to get in. This is about the time where retail traders, everybody out here, starts buying puts and loading in and getting scared. They start exiting all their investments. It bounces back up. They all load back in, feeling full FOMO, and then it probably beats them up one more time. Doesn't have to do that, but I could easily see that playing out. So over here on the Qs are pulling into a really nice support. And if we look over here on a monthly chart, we are back into the previous high of 2021 on this gap. And so that's a really great spot for bulls to try to come back in. At any point through here, this should be about the bottom. I would come back in and look at some of these EMAs that we bottomed off of before. So these are actually some SMAs. If we pull up our EMAs here on this chart, you'll see that we pretty much bottomed off with a 50, and that's a little bit lower. That's around 390 area or so on the Q. So look for that. Again, same story as SPY. It's made such a huge fall off that it can continue if it wants to. But look for the bulls to step back in, play back into these monthly and weekly EMAs around 480 to 460, and then maybe one more bounce back off. So I think we have a dead cat bounce coming. That's if these bulls decide to build some structure and we start getting some strength coming back through. So if we were to zoom in here on an hourly time frame, what we would need to see is some sort of a double bottom starting to come back through. And if you actually fast forward to the futures here, we've already gotten it. Right, we've already put in a really nice double bottom. It's broke the neckline. We're retesting this neckline at pre-market here before Monday opens. So if you guys are watching this later on in the week, you can see how this thing played out. I could easily see us going a little bit lower and then probably finding some bulls, start closing some gaps, working our way back up to some EMAs, and we're going to start having some fun. So one thing that's telling me that the strength is starting to come in is look at these EMAs, right? The 10 EMA right here is this gray one. This has been holding us down the entire drop. Well, we finally got a strong close up above it. So that is your first little warning sign. If you're trying to find reversals, look for that 10 EMA, look for that 20 EMA, find the one that it's constantly rejecting off of and wait for a close across that. Simple as that. So we got that. That's telling me that bulls are starting to do something that they couldn't do on this entire drop. Could this just be a false breakout? Yes, because if we now go to a bigger time frame, right? If we zoom into a 2 hour, look, we haven't closed across the 2 hour 10 EMA yet. So rejected off of it. The 1 hour we closed above it. The 2 hour we have not. And so this is where traps tend to come in. You have to figure out what time frame you want to go off of. At some point you have to commit. The bigger the time frame, the longer this thing is going to take to break, but the more confirmation you have. But at the same time, if this thing goes all the way up to here, by the time it breaks something, your move is already over with. And so you just have to time it out. I'd be looking at the 1 or 2 hour. If you want to be aggressive, this is where your bulls should be, right here. If you want to be conservative, go out to like a 2 hour and just wait for a candle close above this 1 hour, the 2 hour 10 EMA. And then I think that we'll start getting some dips should start getting bought up, and we'll start putting in some higher lows. Just remember, we go out to the bigger time frame, the price action is simply just saying reversal, one more drop back down. And so I would expect us to make our way back into this area here where we dropped off so hard, fill some gaps, and maybe one more rotation back down. IBM, let's take a look at this stock here. So IBM filled its big gap here, and now we're gapping down again. A lot of bulls should have been here, and you can look at Friday's close. There was nobody. People are really struggling to buy this market right now. If you look at this guy too, we are extremely extended on a monthly chart, like really overbought coming up through here, made a large move. It makes sense that this would pull back, and it's probably going to head to its 20 EMA here on a monthly. So that brings us into 205, which is also a really nice strong support, the high of 2011. 2012. So this will probably keep on dropping a little bit more if I had to guess. And I'm saying that because this is the strong bull area and no one came to the party on Friday, and now we're gapping that area again. In fact, we're gapping across the 200, which we really haven't broke for very long. except for back in like 2024. So in my opinion, also, we've broken some key trend lines through here. So even if we do get a bounce, it'll probably fill this gap at 240, and then it's going to keep dropping down pretty good. So I would expect 200 to 205 to be the next testing spot for the bulls. If they don't step in there, we're in big trouble on this thing, and it's going to drop quite a ways, probably down to like 170 to 150. So that's what I have coming on this guy. No bulls coming in yet. We'll see if they actually can reverse and start to bounce back up a little bit higher. But the 50 EMA seems like it'd be a pretty good target at this point, coming down a little bit lower. So 217 or so on IBM, and then let this thing bounce back up. It looks to me like it's going to probably form a little bit of like a head and shoulder here, potentially, right? You have to make a higher low, and it's giving it all up. We're pretty much heading down to the previous higher low, which is not super strong. So be careful in these markets, my friends. We have been going bullish for 20 years without really any significant pullback. Even COVID got bought up hard. We have had some pullbacks in this 10 to 15 years, but the markets are extremely high, right? If we go out to a monthly chart, the markets were just screaming. And the last time the market screamed after COVID, we had a very significant pullback all the way back down into like the 50 EMA here on a monthly. And that also matches up at 480 pretty nicely. So if the bulls don't step in, look for 480 to be a pretty nice support spot. That might actually be a pretty good long-term buy. Like I'll start legging into some long-terms, understanding that we could be going all the way down into 420 to 400. So just be careful. Don't load the boat. Wait for price action to tell you what it's going to do, and realize that the markets are not going to leave without you. They'll give you opportunities to get in. So be patient. Don't predict. You need to react to these markets. Look at price action. And right now, I think that we're getting ready for a very steep bull move potentially this week, and then maybe one more rotation back down. So we'll see how that plays out. If it does, we could have lower to go before that bull move comes back in, but just be cautious in these markets. Love you guys. Thanks for being here. Thanks for supporting Real Life Trading. If you want to come join our community, check out the links down below. If you want some free trading courses, full online courses to teach you everything about trading, they're down in the links down below as well in the description. Have a great week in trading. Control your emotions. Don't be like everybody else that's reacting based on emotions. Look logically at these charts, and you will make money in the markets.